Alrighty. Let's jump into some things. I appreciate you coming on last minute, Pocky. Always good. We haven't had a stream together in a minute.
Motherfucker, it's been like a year.
It's been like over a year probably. I'm just gonna start off with kind of my take on things, how things are kind of progressing within this range as we trade in it. And then I want to hear your thoughts on BTC as well. I know we have similar views, but you play things a lot different than I do, which is a beautiful contrast in my opinion. So let's just look at the 1 day here on BTC. I have this line here pretty much in the sand. I thought we were going to get a lot higher, and I still think that's possible if we do hold near these lows. We're approaching a significant level to hold. Obviously, this has always been a significant level since we've been trading in this range. In the beginning of February, once we created and pushed into it. And every time we've held this level, it's pretty much given a good move up to 72. Let's call it plus. Obviously, we've seen over it and deviations above. And this is pretty much how I see things within the range that we are trading in right now. Whenever things come into the extremes, we're more enticed to look for reactions. When things are in areas like they are right now, they're more in an area of inflection than they are a value area. I wouldn't consider the area we're trading in today as a value area. Two things. We've came into this area very quickly, off a rejection of 69K, and we also are in the middle. So the value area that I would be speaking of is more or less in the 62K region and in the 72K region for shorts. When you're trading anywhere in the middle, it's more of an area of inflection than it is a value area. Just like yesterday in the 69.5 level, this was not value area. This was more or less a area of inflection because when you trade around this area, it's going to react, but how is it going to react? And that's what really matters at the end of the day is you're entering a trade for it to react in a certain way. If it's not reacting at all or it's chopping around, it's more or less an area of which it can react around. Just like you see on the lower time frame, this 69.5K region. If you're looking to short this region, it's taking time to play out. Just like when you're looking along the same region, it's taking time to play out. And if you catch it on good momentum, up or down, you're going to catch the move. Just like yesterday, if you were looking for shorts on 69.5, you would have caught the immediate short down. If you were to try the same short a few days ago, you would have most likely gotten chopped out unless you held your opinion and your bias. Not sure exactly what opinion you had, but I'm excited to hear. I know Aztecs had a short opinion on it, and he held that opinion throughout. And you see how it's playing out now. That's just one significant reaction that could come forth on such levels that we're seeing here. Again, we're coming down to this level pretty significantly. We just swept the lows that took us up to the most recent highs that we have in price at 76K. And now we're approaching this level on a weekend in monthly close, war news on the horizon, all that good stuff. I said a lot there, so I'm excited to see what you want to share and say about BTC as well.
Okie dokie. Yeah, that's it's kind of the same. I think it's just pretty much the same outlook. I already built a chart for this on the daily. I mean, yeah, I was short from here, I'm long from here. So I really didn't have to force much trades except for this morning. This morning I fucked up. 1,000%. I'll admit it right away. I took a small loss, so I closed pretty much everything from this short to cover for the losses. Because I don't like finishing days in the red, especially at like kind of my level. I feel like I shouldn't. I know it's acceptable, but for me, my standards are through the fucking roof. So right now, we're approaching a massive mathematical retracement area. Hence the golden pocket, right? We're talking about the most recent low on the daily to the most recent high on the daily. This, in my opinion, is where Sailor is probably going to start fucking turning on the T-Wall, right? Maybe over the weekend. This is my buy area. I'm locked in. I really want to find longs in this area. The issue is it's too wide to play for leverage. So a spot trader might be able to do something like this. But I'm really interested in this single area right here at 69,398 and kind of maybe play it like a 2%. I don't really want to go any wider than that because then my account's just my port's just blown by that point if it's wider than 2. But I'm comfortable DCAing a 2% area right here. So that would be like 60, we'll just say 64 to 62,665. And though I hear a lot of those numbers like within the Discord and on social media. So I'm just waiting patiently for that. The problem that I really have is recently our value area POC of the range. So I just go strictly off volume, right? This range POC was actually down here. Then we spent a lot of time and a lot of selling up here, which shifted it to up here. So this is actually bearish. When you look at a range, if you have your range POC above, close to your value area high, there's too much sell pressure up there. That signal right there is a key indicator that's saying, okay, we need to be prepared for lower, for the value area low, which is what we just sliced through now. That's normal. I don't expect prices to bounce directly at these huge range levels. Really, what we look for is deviations and divergences above or below these levels. Because now we have kind of like, all right, let's get this. If I can get this here, that'd be terrific. But you're like, oh, we're printing. Not necessarily. Not yet. We can't say we caught the bottom. What we would want to see is what? This. And we want to see this range level shift. We want this to come down here. We want this to move down here. And now we're cooking. Now we have a super fucking clean range where we could, if we want to do this for another 2 months, this is where, and for me, where me and my students make the most money. And I remember you trading ranges, we kill it in the range. Like, absolutely destroy it on catching these bottoms, shorting the top, catching the bottom, shorting the top, catching the bottom, and just repeat, rinse, repeat, rinse, repeat. So that's what I'm hoping for. We've already kind of predicted this even back in the beginning of February of what happened. So I'm just gonna stick to my plan and just play the levels as they come. And that's what I have for the daily. Lower time frame, we actually I just took a long and closed it out break even. I think I might have fumbled a Friday long to ride over the weekend. And most likely my short's going to get stopped out break even too. So I'm going to be holding one short, one long, long from lower, short from higher, but sidelined for the intraday. I love intraday moves. I don't, because these swings, they don't pay out like these intraday scalps do, right? Where my port could be flat for the next couple days because I'm not hitting any TPs. That's why I really would like to take intraday setup so I can actually see some growth. But that's what I have on BTC for today. I feel like anything right now is really forcing and maybe even like some FOMO. With the headlines, that's my kind of problem right now. Is I'm getting into trades, I'm playing the technical analysis, I'm psyching myself out, and then literally the headlines that come out benefit the trades that I was in. But it's too that how can we predict headlines? You know what I mean? Like that's just we're not inside traders. We don't have a direct line to the government or to Barron or to Trump or anything. And that's what I see a lot of right now is that insider type trading PA where let them keep doing what they're doing and we just got to stay consistent with what we do because we know over time it works. And that's what I got.
The difference between this bear market and the last is this is a lot more news driven. And it's not even, I'm not going to say news driven, it's more or less tweet driven. In the previous bear markets, we saw quick crash downs. This one, we're seeing slow, drawn out crash downs on really tweets now more than ever. And it's kind of crazy to see that. And you touched upon a range and how we kill ranges. Majority of the time, 80% of the time, the market is trading in a range. It's better to distinguish or anticipate a range earlier than it is to think that every range of consolidation is a breakout on the current trend that we're trading in. And that's not how I perceive trading. I know that's not how you perceive trading. That comes with its ups and that comes a lot with its downs as well when you're talking about intraday, just like you were talking about, because intraday, naturally so, me and you were looking for trades. We're looking to, click the green or click the red, and not every day is the time to do that. And especially now more than ever, you're going to eat a lot more than you would staying, on your toes and more or less allowing these plans that we evaluate like we are today play out. On the grand scheme of things, I'm looking for plans just like you are right now. Although on the intraday on the lower time frame, I'm looking for a sweep of the current lows like we just had more towards the lower end of 65. I wanted 65 250 as an intraday fill. I could see a case for us going a little bit more lower into that 64.4 region. I see a golden pocket, which I like, slightly below my weekly order block. An order block that we've been chopping around for quite some time. I painted this range and predicted it from 65 to 69. Just like we are chopping around, we see deviations below, we see deviations above. That's what we're going to see chopping in a range, and you touched up on it as well, that we're not going to get that exact retest that you might anticipate. We might swing 2-3% above or 2-3% below a specific entry in any given zone, but we might also retract from that zone as well. So it's important to play it proper, play it a little bit looser than normal when you are playing these extremes, especially when you're playing these extremes. I'd more or less like to play tight in the middle of the range than I was on the extreme ends of the range, because the extreme ends of the range, you're going to see range either reject or support more extreme. You're going to see a lot more of a move than you would if you were scalping. And that's kind of how I like to play it. That's how I like to play these ranges. That's how I like to play the extremes. And eventually a move is going to happen. It's just when. So right now, in the current aspect of the market, I'm seeing things chop around for a lot more than people think they are going to. I think that we're going to chop around for a few more months. I think that we could potentially gauge a range around these lows. And I could be wrong, but I know you were in a short from the highs, and I know you take profit because, unlike a lot of people, you actually take profit, whereas people want to hold positions and act like they're in it forever. Very few people do I know, and I have respect for anybody that can hold an opinion for a long time and hold that very same position, is that not a lot of people are holding these exact positions without taking profit, especially in a range. If you're taking a short from 72,000 and you're still holding that position now and you're not taking profit, I think you're subjected to being round tripped on. I think that that's a valuable take to have. And I'm sure you share similar views.
So it's not an emotional type of like TP structure, and I don't target liquidity. For me, it's just all math, right? So the short that I took at 76, I hit TP1 and TP2. I joked around yesterday with Aztecs. I'm like, hey, can I get 64.44 for my TP3? And if it wasn't for this morning, I would be still holding what like 60% of the position, where now I'm holding like 2% of the position because of the mistake I made this morning. But I mean, it's just math for me. So it that allows like the human emotions of unrealized profits, instead of just like, oh wow, I'm up 2% of the port, or x amount of dollars. I'm happy. I'm taking it. But that's not the reason why I took the trade. The whole reason why I took this trade was because I'm playing this mathematical rejection area of BTC. So if I'm gonna stick, I got to stick to my plan, where if I'm trading this GP as a short, then I need to take TP at 69,606, TP at 67,298, 64,441. Then I can swing the remaining position for like moon bags, right? Because I mean, I got into crypto in 2020, 21, and that's all I heard was like moon boys and shit. So for me, I was like, I still need to lock in profits though, but I don't want to close out the positions fully, because if I fully close out this short, let's just say at TP1 here at 69, now I have to figure out in 4 setups for me to get back into the short, because I don't have any more long setups until lower anyways. I kind of, even if I miss a position, I still want to pretend like I'm in it, because where would I be looking to TPs and where would I be looking to hedge, right? So it kind of lines up that, hey, with my short, I'm taking, like, I'm almost out of the short at at this 236. And that lines up exactly where I'm starting to look for longs, where I would hedge my long. So I'm protected in a way. Like if this long doesn't work and we just want to keep going lower, great. I take my loss or my break even and I still have the short. Where if the long works out, what I'll do is I'll start putting this short in profits, like partials in profits. Like I'll take, I'll shave 20% off, 20% off, then break even. Because I just want to see account growth. I don't need to see lottery tickets. Like I'm not holding this for what 10 days and taking full TP here. That you are asking for a round trip for sure. Like swinging that type of position for that long with size, it would be extremely difficult because your odds of hitting the 236 on playing these GPs, it's not like 80-90%. It's more like 40 to 50. So that means a lot of your big trades, you're only going to be locking in profits 40-50% of the time. And that's just not good enough for me, especially when it could take 2 weeks to hit. And that's kind of, I was talking to Dal even this morning. I was like, bro, it's like some of these swings we're just not hitting TPs on them. Like this long, I'm still waiting on a TP from the 62K, bro. I've been holding that forever. This one was even worse. When I took my long on November 21st at 80K, look how long I swung this and I hit no TPs. And it was a big position. 70 days. But that was my conviction, though.
That's the game we play, man. You stick to your strategy, stick to your system, and that's why it works, right? Like, again, I can't stress enough that 80% of the time the market's chopping around. So taking profit is just as important as taking an entry. Just like you're saying as well, a lot of people have problems taking profit and they don't know where to take profit. I think using the Fibonacci is a beautiful tool because it's right on your chart. But even targeting liquidity, it's two in the same. You got to make sure you're taking profit. You got to make sure you're paying yourself, and always realize that there's another plan as well. I like the illusion of holding a certain trade just to help you feel like you have to look for a new trade or just to create a new plan, because you never have to be in a trade. But as a trader involved in this market, it's important to understand where you think the market is going and how you're going to execute when it gets there. So for the next few months, I said that I think we're going to be in a range still. I still think we're going to be in this range. I don't think we're breaking down. I don't think we're breaking up just yet immediately. I do think we're still going to test 80K before we sweep the lows. How do you feel about the next few months? And how do you see things going in those next few months?
Man, predicting like that far ahead's really, really, really hard. I mean, sometimes I'm on the money. Like when we were doing this little 4 hour range in the beginning of February, I talked about all of this happening pretty much. Seeing it play out is pretty cool. Making sure I capitalize on those moves is great. Now I am kind of stuck because I only have one long position, like one long opportunity that's coming up. And it's this guy right here, that 64 to
Yeah, that's the most
62. Like
common.
that's all I have. If we don't hold these levels and reclaim that value area low, I don't want to sound like super fucking bearish, but we have a problem because like we're gonna make a new low and we're gonna go grab this 54K liquidity, and I don't think people are ready for that.
Yeah. I'm gonna pull up my screen here and give you a little bit more confidence what you were just saying. So what Pocky's talking about makes a lot of sense. You got to realize that there's two outcomes to every single trade, right? Up or down. You're going to win or you lose. And it's okay, either or, as long as you trust your plans. The one thing that I do want to bring up is like higher time frame. What are we looking at here? So we have these lows painted, obviously. We have these current highs at 76, and we have these significant highs that led down to a supply block here, right, in this level just below 80K, which makes a lot of sense since we had this market structure break right over here where Pocky just was talking about his previous long position when we traded within this range at 80K. We lost structure. We closed below. We front run the retest and aggressively nuke down. The reason that I thought we were going to, and I still think we're going to test this level, maybe slightly below, is because we have this liquidity all built up over here. But we're seeing how aggressive this retest holds for a short. And on the higher time frame, we also have very similar structures on the higher time frame here. We have an obvious flag here to the downside. This is not what you want to see. If you're looking at pattern recognition and you like chart patterns, this is not what you want to see as a bull. This is not what you want to see if you want price to go up. We don't even want to see this trend break like we are right now. We want to see in the next 5.5 hours into the weekend, we want to see this trend close above, which I still think it could do. I think it will end up closing the one day above towards 67. I don't think it'll close above 67, but I think it can close towards 67. It might be 66.8, might be 66.6, might be 66.9, whatever the case may be. We want to see it close above, which would confirm an SFP off the most recent swept lows, which means that's a reversal pattern, right? A swing failure pattern, that's a reversal pattern. But off most recent reactions, you're going to want to see it hold from these levels. And we've held this level for so many times. So to put max conviction on a level like this is generally hard. And it sucks to say it as a person that was playing longs at the top end of this OB. You're not in a safe short. And that's why people get straight away from taking shorts late. That could be the move as well. Me as a trader, and I know this is how you are as well, I don't chase a bias. I don't chase an opinion. If I'm flipping short at this point, and I'm not even just talking about my ego, I'm just talking about a person that's not counter trading their opinion, one, but also not late catching trades in a range. In a trending market, sure, I could flip long or short at any given time if I feel the need to, because we're trending and it'll aggressively catch momentum. But just like Pocky touched up on, these trades are taking so long to play out. Who's to say someone taking a short today that was previously taking longs like up here, that they're going to be right? That's not a way that I approach trading. I don't approach trading just because we broke a trend that we're going to continue a short, because now we're trying to look for a logical invalidation. And a logical invalidation for me would not be on top of this high. That would be way too loose. That is a logical invalidation though. But if you're taking a logical invalidation, on the same token, you have to take a logical TP towards that invalidation. If I'm looking to enter longs like Pocky's looking to enter on, which I am looking at these levels, I'm looking at slightly below, is like, you got to be willing to take a TP pretty loose towards these lows here, right here. If you're looking to take a short.
Now we can fucking reverse.
Exactly. And that would be my opinion on the situation given. Just like Pocky explained there. This 4-hour close right here is pretty flat for me. It's not completely flat. We did get these closures below, which again, you don't want to see it as a bull. But we're still trading within a range, and I want to stress that. I want to keep stressing that. Just because we are breaking down does not mean that we're going to fully break down. And even if we reverse up and reclaim trend, it doesn't mean we're going to fully reverse up and reclaim these highs as well. We want to see a reclaim of now 69.5 for sure. We want to see a reclaim of 71.2. We want to see a reclaim, and I would say even stretch it up to 71.5, 72K if we're being extremely conservative. And then after that, you want to see a reclaim of this 74K level here, which would be these wicks here. If we do start to push up to these levels again, I think that taking a short here is not unwise. You get easy invalidation to do so. I really wanted a short a lot higher. I think that a lot higher would have been a lot. It's a lot more of the conservative route. Obviously, you would have seen a push. And I still think this is possible, that we could see a push into this previous range and then a break off that acceptance below. I think this is the safest short in the game. I could also see this play out a lot more aggressive than that, where we front run the aggressive short, where we front run the logical short, just sweep these highs and reject off a 78.6, 79K. I agree with you, Maxing. Like, no trade in the middle is a good trade. But you want to make sure that you're executing on these extremes. If we break below this order block and we don't hold the levels that Pocky was eyeing within the golden pocket or within the fibs, honestly, is like, I don't even see playing any of these longs is a good trade overall if we start aggressively nuking, especially into some news. I don't see anything as a smart trade. I see the lower end of this order block as a really good area to begin to look for longs, because if we're going to hold, we should look to hold pretty soon. I know a lot of people that I respect that trade with size that closed their longs recently. I was allowing my longs to be invalidated at 67.2. I did end up closing my longs break even before the move to 67.2, which was good, but I was willing to eat that invalidation anyway. And honestly, looking at today's price action, I wouldn't have been mad. I'm never really mad at a trade for losing. I'm more or less frustrated that a lot of other people have to lose because of that, because I know a lot of people enjoy my analysis, they enjoy my trades, and they take it as such. But that's the nature of the game. If you're willing to take a loss at 67.2, you're not eating the potential drawdown that would have taken you out here. And honestly, that's over half of today's one day candle. That's an extra 3% drawdown that you're eating today if you did not take that hard stop invalidation. And that's just the nature of a range.
Damn, I think I fumbled the bottom.
Yeah, but like how we trade, there's a lot of opportunity.
Yeah. Oh, yeah. I'm still long from 62. So if this is the bottom and we fucking go to the new all-time highs right now, great, cool, whatever. But I don't like missing opportunities, especially when the setup is there. This was a forced long, and that's why I was really quick to close it. What I'm gonna do though is I'm gonna journal and make sure that I put this down, that when we have these conditions, when this setup is presented, this is the result. But I need way more data. Like I want to see this work, 70, 80% of the time. Because this is technically the first time I've ever really taken this setup. It might look good right now. Trump could fucking make a tweet in literally 30 seconds and we could nuke to 64. Being prepared in this type of price action is the best thing that you can do. And then even if you miss the move, not necessarily FOMOing in, I hate the word FOMO. It's just so against what I am. But if you have to long higher with another setup, that's fine. As long as it's profitable. At the end of the day, that's what we're here to get. It's not Pico entries. That's not always the case, right? It's not about being Pico. That's great because we don't see drawdowns. We're not worrying about stress or anxiety or anything like that happening to manage or monitor a trade. That's why I like Pico entries. But if I get stopped out break even on this short scalp and I've already closed the long scalp and we go and test let's see, I don't know, 70K maybe, 69, 68, somewhere around there on Sunday, we're going to print new levels somewhere in between there till here, right? I'll just play those. It's not going to be a 65 500 entry, it might be a 6700 entry, and we could ride that up to 80K if that's the case. So I always like being prepared, and that's what it is at the end of the day, is being prepared instead of just sitting here looking at the same chart for 3 hours and haven't done anything. I think your time could be spent elsewhere, back testing, or just enjoying life, or preparing for the next move. And that's my takeaway. 6-7. This guy.
Yeah, no, I completely agree with you as well, bro. I do. I don't think that there's an issue to chasing as well like you, but I like to be precise. I like to be consistent in my approach. I don't like to flip-flop strategies or systems, and I know you don't like to either. I want to touch up on ETH here as well. Yeah. And so ETH here, on the 1 day, we pushed up into the top end of supply. So just like I brought up supply on BTC, where we pushed up to this supply level, and we really didn't push up into it high. We rejected at the 76K, which was at the lower end of the supply block. On ETH, we were able to retest the majority of it. ETH is actually looking really strong over here until it fell flat and looked very, very, very fucking weak. We pushed up to the top end of supply. And really that was the only level. So a lot of people on this push were thinking we're going to go higher. I was a lot more optimistic about, not optimistic. I was going to say I was a lot more hesitant, and I was taking profit on anything that I purchased up in between this flip. I know I got chopped up a little bit here, but then I ended up catching really nice longs. And I didn't chase this move up. I was more or less positioned at the extreme ends at 65.2 for BTC, which would have been just below 1940 for ETH. We have this previous structure break here on ETH, and we never got the supply buildup that we got on BTC just below it. We got a more aggressive rejection, which is why ETH was looking a lot more stronger on its last push. And this is where you want to see relative strength or weakness to ETC from ETH to BTC on this next move. Needless to say, we pushed up into the supply block, into the top end before rejecting, right? We closed this one-day candle below this high right over here. We did not sweep the top end of the supply. We swept the next candle that came after that caused this rejection into the current range that we're trading in right now, and then closed below, confirming that SFP candle. And then we printed the lower high into it the next one-day candle thereafter. I'll minimize it a little bit more to the 12 hours so you guys can see the slow decline before price aggressively rejected, and then close below that structure break there. I'll take it a little bit more on the lower time frame so you guys can see on the 8-hour. I know a lot of people do not trade the 8-hour. They joke on me for trading the 8-hour as well, but I like to look at it. And then on the 4-hour, you could see how this price action is consolidated before that slow decline breakdown of the structure, and at the current price action that we're currently seeing right now. We're not really seeing any significant strength from ETH on the last move, like we did see some alts such as Zcash, Tau, Hype, coins like that. Even XRP. I was looking at XRP the other day as well. XRP did have a crazy candle.
Look at that. Like the move it made to the upside was insane. Look at that. Look at that wick, bro.
Yeah. It for sure had a nice, crazy candle on the last move up. Yeah, I agree with you as well.
It's crazy.
Even SOL had a decent move up. Almost hit $100. Yeah. But needless to say, like when you're looking at the price action from highs, right, to lows, and I'm more or less looking at this candle to this candle, the lows to the highs. This is where your range is, despite candle wicks above, despite candle wicks below, and all that good shit. We're gonna take it down to the lower time frame, and like, what do you see now? Like, this does not look appetizing from a long perspective. The one thing that I am looking at for ETH, because we are in a range, and like, I don't necessarily like get what's happening with ETH right now. I don't understand its price action as of late. A lot of people ask me how come I'm not trading ETH as of late, because I don't understand it. When I don't understand something, I'm not going to trade it. I understood Tau a lot more, Zcash, Bitcoin, Hype, a little bit hesitant on trading that as well. ETH, I like to look at the fibs when I'm very, very, very unsure of what's happening. The fibs are just a blind way of me like, what's going on right now? Like, let's see what levels are clearly playing out. And for me, we're right at the golden pocket there. We already retested it. Does not mean we have to hold it. Does not mean that we have to reject it. We can easily hold here, move to 2020, reject there, chop around before the next move happens, and then we reject off of 2060 before the next move down, and then we lose this GP altogether, right?
Hold the daily. From the low.
Yeah, that's what I was about to touch up on right now.
Crazy how perfect it is, right? We're in a big buy area, just like BTC is, you know?
Yeah. From the current low to the current high on ETH, this is what I have. That's not enough for me to feel like I got to take a long here and now. So just like Pocky was saying as well, from the current one-day low to where price action is at right now, like I would more or less look to trace out these lows to highs. This, to me, is more or less what I would be looking at from like a Fibonacci perspective. And like you were just touching up on your analysis on BTC, this is a very fucking loose area to DCA if you were looking to play it, right? Like,
it's huge, bro. If you're a spot trader, you're foaming at the mouth for this because it's either this or nothing.
Yeah, no, 100%. I completely agree with you. And even like if you're playing a position on leverage, on spot, like you're looking to respect these TPs exactly as painted on chart. It does not get easier. You're looking to target 2090, 2160, 2240, 2400 as such. That's how I play it because like we're in a range, and who's to say like even if we tap these levels, we could just reject off each of them, like every single one of them. So you're going to want to be DCing your entry, averaging it out. And if you get a whole fill, even if we deviate slightly below, you might have an average entry at around the median line, which is a good enough entry to swing you into these TPs that we speak about. You get a good enough entry to TP, it just has to make sense. And I like to I like to get a nice equalized zone here. And if I was looking for one, it would be more or less at around that 1920, which would make sense for me to rebid that 1940 to 1920 zone. But it doesn't make sense when I'm looking from it on that lower time frame perspective that we were just drawing out here. We're in the GP on this low to high sort of time frame here. And if we're rebidding this 1940 to 1920 zone, it wouldn't look good from an intraday perspective for me. So I'm more or less looking for what alts want to do relative to BTC and trust my opinion on BTC before I make moves on alts. Because alts can reject a lot harder than BTC does. Even if we want to hold the floor for BTC at 65, or let's say 65 250 here, and ETH wants to hold a slight deviation below the GP, or even if it wants to hold here with a higher low on the retest that it has on the GP. So people longing 1980 with their stop below 1940. If it holds here and BTC, let's say, wants to hold at 65 250 and then push up towards 66.8, 67 2 like we just spoke about, and ETH wants to hold even stronger and look to push up on this level. If we reject our BTC and look to sweep 65 250 off of a retest of 62 67 2 and look to go lower, I think ETH's just going to go a lot lower. And that's the reactions that I want to gauge before trading alts again. I was willing to trade alts this week early on when I'm looking at Tau, Zcash, Hype. Even last weekend, I'm positioning for Zcash, this, that, and the third. Now, I'm not looking to do that more aggressively. So now I'm going to kind of get onto your screen. I want to hear your take on ETH and alts alike. I know you have some opinions, and I want to hear that. What's up, Rigo, my boy?
You guys will see that my shit's pretty much, it's systematic. It's algorithmic to the T. It's going to be the same as BTC. I could literally just copy and paste the BTC chart and it's going to look basically the same.
To add on to that as well, like I think like you stating that it's exactly the same is important to realize. If alts are exactly kind of the same as to what BTC is doing right now, if BTC wants to go lower after a bounce, alts are going to get fucking smacked. So don't take that with a grain of salt. Like, take that analysis appropriately. It's important.
BTC's forming divergences and could see a pop. Alts are holding right now at key levels. We could see them make a pop. So I'm directional bias on Fridays. I like to look for longs. It's just like historically, Tuesdays are great for longs. Thursdays are good for shorts. Fridays are good for longs. Sundays are good for shorts. So I do have a directional bias throughout the week. And it just so happens that we're always in a buy or sell area on those days, where the other days are more like our TP days. But the difference with ETH is it actually looks a lot stronger. So when like Tex is talking about 800, I'm like, we needed to operate more up here and get the range POC to move up. See, this is what I'm talking about. Like, this is completely different. The structure looks the same. We're in a GP on ETH and alts right now, just like we are BTC. The difference is we have huge range levels that support the longs on alts right now. Not like we do on BTC. It's completely kind of the opposite, but the PA looks the same. Range high is pretty much at like 21, 22. We have a low at 1932, and we're bouncing off the range right now at 1973. The range doesn't look that clean, so what I would this would sync actually perfectly with BTC. Is if we go for that lower end on BTC and we range for a little bit, I want to see this level push down and like here, and then we do our little shit down here like in the 1800s, and then this range level stays, value area high stays, but now we have a really clean range we could trade, right? So deviation, reclaim, target the range, POCs, fib, TP1. Go to the range, TP2, deviate above the range, TP3, perfect. Look for some fucking shorts and ride it back down, if that's the case. If not, and we just want to break out, great. Guess what? We're positioned from the bottom. And if we're not, then we just got to wait for pullbacks and play the pullbacks there.
I really enjoy the deviation reclaim strats as well that you're kind of talking about. It's not a strat that I see you playing often, but I think that you can play it a lot more so with these deviations on the... Man, you know how many times I've pulled up a Fibonacci and I've seen price deviate a certain area on the fib, and then I'll play a deviation because the lower time from RSI divergent wants to play in tune with that level. And just like you said, it's all algorithmic, it's all mathematics. I mean, it makes a lot of sense when you break it like that. It's important to understand that before, let's say, like $800 is reached on Ethereum, there's going to be 1,025. There's going to be 1,200. There's going to be 1,500. There's going to be 1677.8, right? There's going to be levels to play in between, but understand which levels are going to hit and how to play them is important. You're not going to try to catch every single pico candle on every single drawdown or every single move up. You're looking to see how these levels react on a lot of them, especially with alts, before you even look to play them.
Yeah. Oh yeah, that definitely. And what also what's going on though is we have a lot more opportunities for longs on some of these alts. Like I have one long opportunity on BTC. I think I have 4 or 5 on ETH. So there's a lot of opportunity. I don't want to say, oh, we're kind of setting up for like an alt season. I'm not going to be that guy. But I mean, aren't we kind of due? In my opinion, I think we are. I mean, alts have taken a
I agree.
fucking beating, bro. Like
Oh, I'm
these
fiending
poor
for one,
things have
bro.
been just getting absolutely shit on. I would love it because that even is like Max's like matches with Max Payne, right? Like no one's prepared for alts to go fucking crazy. BTC ranges for another couple months, maybe in this huge daily range, but alts just party. That would be that would be really fun because I think the market needs that. I think we want some capital to come into the market because ETH might be at like 2,500. We'll start seeing like money come back into the market when these alts break these ranges, like these big daily ranges. It's not hopium, but I'm just getting
I
prepared.
completely agree. I think that's a great point that I didn't even have in my head there for a minute. Like bringing that up before the weekend, before the monthly close, like there's a lot of liquidity that has been extracted from this market. If there's a time to bring in new liquidity, like now's the best time. Bro, I have in real life friends. I don't even know if they're okay anymore.
Yeah. So we have levels, we have liquidity, we have GP, we have so much stuff for us to play here. And I think there's a couple of our members right now that are actually in ETH right now. Yeah, I know. I gotta eat lunch. I'm sorry.
Gotta get that protein in, bro.
um a pub sub, dude. Come on, man. I have to eat this quick because I got training with the kids in a little bit. Wait. Oh, I thought you said full moon. I was like, oh no, here we go, full moon shit. So I, I like ETH right here. I mean, we have like some divergences that are forming. We could take another dip and get like a double div or a 3 drive.
It already hit the GP as well. It has a little bit of an inverse on the lower time frame.
Yeah.
Hella oversold, mad oversold, and there's probably people that are trapped long at 2030, right, like above there on that last drop. So
Oh yeah. I think anyone that was long enough here, they definitely got licked.
yeah,
Cause
yeah, yeah, yeah. I can see that. I can see that.
yeah, that's a 4% drop. Yeah, definitely. Yeah, they got fucking smacked. So
So I mean, yeah, like, and that leads on to the point that like liquidity drives the next move. If people are getting liquidated on this move, which is a logical place to, right? Like you're gonna put in validation. How loose you're gonna put? A lot of people like to play the 3% rule. I play the 3% rule. It's like people more likely got invalidated on that trade right there. If they took a 2030 ETH trade, most likely they got taken out, and now they're looking at the trade like, ah, fuck, I might gotta stop at the bottom, right? How many times does that happen?
yeah. Oh yeah, 1,000%. Plus, you got to remember, like, did they add right? Did the DCA? Because like you think about like, well, 4%, 5% isn't that much, but if they're DCAing every percent, they're extremely fucking overexposed if they DCA. Now, if they just did single entry and they had their hard stop, yeah, they got stopped out, and they're probably still looking though for longs, right? Like John's been doing amazing with Tau, like getting in and out, and really capitalizing on those moves for a directional bias. I haven't seen him short it once yet. It's just continuing longs. Now, just for shits and giggles, because I thought someone said the moon thing, we are coming soon to a bullish moon. which is just so funny how we're coming to a new moon that's a bullish moon. We're at the range lows. We're in the GP. We're at liquidity. Like, I don't want to sound like a full moon boy, but the shit's lining up pretty good. I'm looking for longs. That's the only thing I can do. And my directional bias, I mean, for the last 3 years have been pretty fucking good. I'm looking for shorts. A lot of people are bearish. I'm looking for longs. A lot of people are bearish. I'm looking for it again. I don't care. We can make this low. We can sweep this low. We're still bullish. We didn't break structure yet. And you got to look at it as like, this is the low, this is the high. As of right now, we're making higher highs. Until we take out 60K, it's bullish in my opinion.
Yeah, and I was also I was chatting with a friend of mine as well as a prominent trader. I respect him a lot, and he had the opinion that, and I was talking with a few other people as well, and they had that opinion as well, which is pretty interesting. Is that April 1st is Passover, beginning of a new month. We have all the war news and all that stuff going on. Like, there's a lot of things that could potentially move the market when it comes from just solely a time frame perspective. And I mean, April historically hasn't been one of the worst months. It's most likely more than often April has been a bottoming out sort of relief month. And these sort of holidays are relative. I think it's all relative when you look at it. I think that you talking about the moons isn't irrelevant. I think that people talking about holidays isn't irrelevant. It's all relevant on how you see it and how you trade it. I think that's super important to look at. Again, like, we're approaching the weekend. Monthly's closing. War news is on the horizon all the time, every day. Tweets are moving the market. We have holidays coming on. We saw, and I don't want to talk too much about politics or like any side given or whatever. We saw the Israelis attack on a holiday. We could potentially see that sort of thing happen on the adverse side as well, and that's only in a few days. And that could potentially lead to a bottom, right? That could potentially lead to a bottom. It's happening on very drawn out price action here of every day the U.S. is saying we're not going to attack, we're going to attack, we're not going to attack, we're going to attack, we're not going to, and it's just slow bleeding nothingness into the abyss. So we just see big moves into the market, but don't forget that we have tariff wars too. Exactly, like that again is like, and we forget about the Epstein files as well, right? Like all the things just. I'm just fucking. We're not getting into that hole. We're not getting into that hole.
Is Reg still here? If he's still here, he actually pointed out something pretty crazy this morning. A fractal.
Oh yeah, what kind?
This fractal here.
Oh no.
He pointed it out, and if it's true, then April will be red, and his fractal plays out. I'm hoping it's more more like this. April 2020. Yeah, baby. Like, let's do April 2020. Look what happened from April 2020, bro. And we we win 1,000% from there. Give me that. Give me that.
Oh,
I'll be cool with that.
Like, I still am under the assumption that okay, so really quick, like, I want to label out a few alts that I'm interested in right now. And okay, really quick, also pull up River. Out of every alt, pull up River. Like, bro, this is a prime example of, like, there's clear liquidity, clear volume in a chart, but look what happens when it goes to absolute shit. It does nothing. It's a trader's market. You could trade the coins, but don't get too attached to them. If you're looking, and that leads into my next sort of example, like, you want to look for alts that you're, like, interested in for the future. What alts are you interested in? There's a few alts that, in my opinion, you should be interested in right now. Like, when you're looking at strongs that are, or coins that are sort of kind of strong against BTC, coins that are moving first, right? Hype, Tau, Zcash, even Bitcoin Cash, even, I mean, XRP to an extent, Dogecoin, Fartcoin. These are the only coins that I can even think of that are worth your time. I see people trying to trade like CRV still, Polkadot. I mean, even Chainlink. Like, let's be real. These are old fucking coins. Trade the coins that are relevant, the coins that are going to make you money, the coins that are worth putting your investment into, or don't trade them at all. You're better off trading the king than you are anything else if you're going to look at coins like even SOL to a certain extent. Like,
It's funny you talk about River because there's a setup on it right now. It already played
yeah.
out though. Yeah.
I mean, fucking 13, it should be at a perfect place to buy, bro. This shit fucking took a tank, dude. And honestly, too, like, hindsight, always 2020. When you're looking at River, like, I guarantee you, people were looking to short $26, or people trying to short $24 and they were taken out. People trying to short $21 and they were taken out. Like, these are, like, important things to look over in the current atmosphere of the market where you have time to actually look over them. If you're taking losses at a $24 level, at a $26 level for a coin like River, look at this, at the chart, see what happened. See, because you were clearly early and you clearly had the right opinion, just the wrong timing. See what happened and what you could have done a lot better in the trade and what could have saved you. Look at charts like BTC. Look at your indexes. Look at heat maps like you just brought up, Batman. Look at these things that could have, and honestly, too, I wouldn't look at the heat maps when you're looking at a coin like River because that's going to be a full skew of vision. There's no reason to look at heat maps on a coin like River. These lows. Yeah, exactly. There's like zero.
There's a lot, bro. It's 156 million being traded on Bybit, 500 million being traded on River. I think people are building fucking long positions on River. That's what it looks like.
I mean, I could see that up until $10, but all that needless to say, like, heat maps on a coin like this, I mean, you could get blown through like liquidity at 16 because you clearly had liquidity at 15 to 16 and then it completely nuked down $3. Like, you don't want to get caught in a coin like that.
It just grabbed it.
But I agree too. Like, I see a little bit of oversold here. Obviously oversold on the hourly. Look at a flip up with a divergence. 4 hour. But like the 30-minute price action is so nasty. Like the lower time frame just looks.
30-minute div right now.
I know, it just looks nasty. Like, you get too much of an easy invalidation there. Like, it just gets messy for me.
High risk, high reward, right?
Yeah, exactly. 100. I completely agree with that. Exactly. Like, if we were to hold River, we were to hold the lows, we should go squeeze anybody that looked to short 16, 15, 20. We should go squeeze that quick. Hi, you checking the bullish memory? Yo, I think anything in this market is relevant right now. I think if you look at moons, if you look at, man, what time does like my pet wake up? 8 o'clock a.m. Does the price move at 8 a.m.? Shit, I'm going to keep look onto what time he wakes up, right? Like, it's like anything that works for you in this market is worth taking a look at. I don't think it's irrelevant to the conversation at all. Yeah. Does anybody have any charts that they want us to look at? Anything in particular? I know we stressed a lot of like more or less like higher time frame more than lower time frame, but like we have 4 days left of the month. We're approaching the weekend. We have a lot of shit economically that's happened. We just broke into the lower end of the range, but we're not at a value area. CRV, you're sick, bro.
Go ahead. You can pull it up.
Okay, I'll pull up. I'll pull up whatever charts you guys want to really quick. So let's look at CRV really quickly, and we'll look at other things too. We'll look at CRV, and we'll take a look at ENA. If anybody wants their chart looked up, put it in the text right now. If not, forever hold your peace. I know Pocky hopped on here last minute, so I know he's got shit to do. I'm going to go take care of some things as well. So make sure that you're putting those things down below. CRV, I mean, you see how heavy it is on the monthly. Like, it does not look good, obviously, but we're just going to scroll into the weekly and just, like, look how draining you're going to be trading this coin. Like, so draining. Even the 3-day, like, just collapsing in price action. Either, like, you're quite literally, like, Pocky loves to say Pico. Like, you're quite literally aiming to trade the Pico end of this chart on the highs or lows every intraday, or you're not trading at all. Like, if you're not catching a long or a short at the absolute top or the Pico entries, like, you're getting fucking chopped up. And I mean, I'll like take it out to the 1 day. We'll get a little bit more technical with it. I guess you don't have to trade the Pico entries every single time, but just take a look at your pivot. You want to have a pivot when you're trading a range. And this is your pivot on CRV. Like, when you're trading this pivot line, you're going to get chopped up. every single time. It does not make any sense unless you're like catching a good trade on momentum. Like you get this deviation below after the initial push, and then you could maybe pull up your fib. But even like when you pull up your fib, you're not going to get any action there. You're only going to get the top end, the middle end action there before the actual deviation occurs. And then you could, and then, and only then, you could get your flip up with this pivot with your invalidation slightly below or above that 3%. And then when you're looking for a short, again, like the same thing's going to happen here. It tries to chop you up before the next move happens. And then again, when you're trying to catch a flip up, you can't even catch a flip up of that pivot unless you scroll down here. And then you could catch a nice move up here with your invalidation, what, 8%? No. Like, and then if you're looking for a short here, like, you're going to get chopped up before the move happens. And then eventually...
Because even if you have an 8% invalidation, that means you're going to have to swing that trade at least 16% to look for a 2RR.
Yeah, I agree. And then even at that, like, you're only securing that 8%. And, I mean, I'll give you the benefit of the doubt, and we could for sure take care of a smaller time frame setup here and clean up house and, you know, play that tight invalidation play around the pivot. But you got to realize you're going to have to try this trade more than once. So just because you catch it here on a very tight invalidation 1% trade does not mean that you're going to catch it one time. You're going to try this trade over here as well, depending on the confluences you check out, obviously. You're going to even, try that trade here, and obviously it'll help. And you're going to try this trade over here as well, and it'll take you out before it moves, and then you might catch it as well. But how many times are you going to try it before you actually catch the move, right? So just because it plays out does not mean that you're going to just try it once and it'll play out. But in retrospect, like, we'll take a look at CRV. We'll pull up the fibs, obviously. We'll draw the fibs from lows to highs because I think CRV is a prime chart to look at a Fibonacci when you're looking at a chart. And, like, we're approaching the lower end of that fib. Like, it's prime real estate to look for longs, obviously, right now. We had a front run of the fib to the most recent local high for a 14% move up. So is it the most logical place? Maybe not. If it begins to look to break it in the 1 day and then look to close above, then you'll begin to get like a 4-hour divergence on the RSI here, which it's already beginning to print. And then you could maybe look for an SFP on the 1 day if it wants to look to sweep this level. And then maybe you could look for a reversal there. But a coin like CRV is not a coin I would look to knife catch. I would not look to catch a low on a candlestick like CRV because it might need lower than the fibs actually anticipate. Whereas a coin like Tau or a coin like Hype or a coin like Zcash, you're going to get a lot more of an accurate Fibonacci, a lot more of a bullish one, which is what you want to see on a coin compared to CRV. So I don't want to go too much on that one. I want to look at a coin like Hype. I'm going to take a look at Tau, Fart coin. I think we'll call it at that one. So we'll take a look at Tau really quick. So, we touched up on Tau. Yeah, that's a good one to chat about as well.
I don't think people understand what it is.
Yeah, no, 100%. Like, Tau right here on the weekly looks fucking fantastic. And I was able to generate a fat win on Tau just by seeking that weekly level. Granted, I took a short stop at the top end of this weekly break. I flipped long right before the move happened at 278 after I took the L on this weekly spike. And it played out beautifully. We have 2 days and 5 hours left until this weekly candle closes. I said that we had a lot of time to break up to 365. I said we had a lot of time to break to 310 from 270 before the weekly even happened. And now the weekly's 2 days and 5 hours left to close. We're already coming down to the top end retest. I think that Tau is in a very good retest territory for people that missed this move that want to catch the next move. If we don't close below 310 on the weekly, I think that you get prime retest territory on any pullback here. So what I'm looking for on Tau, I want to see a 310 close over. And then after that, I want to see any retest on the top end of this candlestick here. Anything to 385, even slightly below 385 for me, is a good retest for Tau in the next week and the week after for us to push up to 445, 440 area. That's where I'm looking for on Tau now. In retrospect, what we had lately, we had this weekly candle pile up on this order block. On the 1 day, I'll pull up the 3 day really quick. On the 3 day, we also had this order block sort of pile up here. We had the close over on this 3 day candle, which in turn closed and confirmed this demand. And then on the 1 day, we had these candlesticks print from the lows to the highs. One side was going to get taken. I say that all the time. When you're trading in a range and you get candlesticks like, or let me rephrase that. When you're consolidating after a breakout, because Tau had a consistent move out, and then we had a consolidated sort of very choppy, very compressed price action, but Tau showed its hand. It printed a low and it printed a high. One side is going to get taken, and you had 4 days to anticipate one side to get taken. All this was doing was showing its hand, in my opinion, and it eventually moved up and broke this high, and that's where you targeted. Anything thereafter is you seeking the logical level of resistance, and for me, that was this level on Tau right here, was at 365. This was where the 2024 lows were able to finalize and compress before the next move up, and where we saw a deviation below quite a few times before the next moves thereafter happened. This is, for me, a logical place of resistance, and we saw a 14% move and rejection down. I'm interested to actually hear how you played Tau as well, because I know you were interested in it as well.
Yeah, I've been playing it. I played it from a lot lower, and I didn't swing it. And that goes to show right then and there, like, that should always be the plan. I should always play my fibs. I'm looking right now. I was trying to play a little bit of a divergence at like 326. And it's not necessarily playing out the way I want it to. But I was prepared to DCA all the way to 306. And I'm targeting like new all-time highs. Like it's not like a fucking little scalp I'm trying to do. I'm trying to swing this shit to new all-time highs because of the strength. But with it being the weekend, I'm gonna probably let it do its thing. And I really like 311, bro. Like I like 311, 75. I think Dow actually has like a DCA area down there. I like it a lot. 311, 75 to about 305 would be a blessing, not it, with a bullish divergence. So I'm not just gonna blindly play those levels, but that would provide us like probably one of the best RRs of this year for me. Cause my TP1 would literally be at like a 14 RR. TP1 14 RR. So if we get it, I definitely want to try to take that trade there. Man, dude, it's so bullish. I mean, like, fuck. Like just looking at it, like on much higher time frame, it's. I want to see something real quick. Where's the 236? Yeah, dude. Yeah, like 440, bro. Like I'm looking at like 440 maybe for TP2. Right now we're at the 0.5 of like a massive daily fib level. I'd love to see these levels hold right now. I think John's playing it right now too. So like this is great. So if 311 though doesn't work, my bias is still gonna be new all-time highs. So that would be what? 800. I don't know. Maybe it's too bullish. I don't know.
Nah, I don't think it's unreasonable. I think Tau is like showing its hand as one of those coins that can do it in this atmosphere.
Yeah.
But I wanted to also really touch up quickly on that Fibonacci you were just talking about. Like, look, we were just talking about deviating fibs and trying not to be super pico and whatnot. Like, look at how Tau like retraced fully from the most recent low to its most recent high. And I'm talking about from 120 up to 540, came down, retraced right into that GP, sliced below, closed below, before deviating right back up to it, retesting it, and pushing back up into the most recent high. This is like the cleanest example to show you that not every time do you have to be fucking trying to catch everything as they come. See how price reacts and play it as such. Even if you just had the fibs and that's it, like, you're catching a good trade to move you into that next leg up. Like, this is a prime example of what we were just talking about. And you could do this from higher time frame to lower time frame. Tie in like oversold fibs, whatever you want to do. Like, if we take price right back to this price point and we see what the fib was doing, fib went into oversold territory. Or I'm sorry, what the RSI was doing. RSI went into oversold territory and then came right back up above, we're looking to retest that fib before eventually it pushed out of that level. And then even when we take it down to the 1 day and we look to compile if there was any RSI divergences printed there, if there was anything happening in the lower time frame that would have yeah. Like, look at that. Like, the 4 hour came into this level and deviated below, closed below, printed a little inverse action before it gave you that RSI divergence confluence after deviating that fib. If you were taken out, even if you were rebidding this level and you were taken out brutally, you're okay, because this is a level that you're going to try to play again when it comes back above and confirms an entry, even if you did not catch the initial flip there. And I want to see if there was even maybe a reason or a confluence to get into this trade here, which was the initial flip on this 1 hour. You were more or less getting smaller time frame divergences on the bearish side, but you had a 4 hour divergence print there. I don't think that's super accurate given the wick. See, like, even on the 30-minute, like, we're in oversold territory, and we eventually flip it up super aggressively. Like, if you're trying to trade this the way that I'm speaking about right now in that next go, you would have not caught this trade. You would not have caught this trade. This would have been a very aggressive trade on momentum that you would have caught with your invalidation below, like, this level here with a 5% invalidation into oversold territory. Mind you that. This is not, like, a trade that I would have taken. And that's like the reality of it. You're not going to catch every flip because not every flip is going to give you confidence to enter. Right, Pocky?
No, especially when I don't play flips that much. And then even if you did that, you missed that move, you just pull the lower time frame fibs, and that's your second chance. I think a lot of people are forgetting about the second chance.
Oh, yeah, 100%, 100%. Like, if you were to miss even, like, on this level here, if you, like, all this happened, it grinded right into it, like, you would have for sure been able to catch this as well on a deviation too. And then again as well. I was just going to bring that up as well. You can then again bring it up here. And this works very well into the lows. I like to paint them on the flat candles, so I would have had an even more accurate entry there. But that even, like, in ranges of consolidation, up or down, playing the fibs are key. Especially when you're unsure. I think this is probably the smoothest way to tie in RSI divergences. The smoothest way to do it when you don't want to fucking draw too many things on your chart, when you just want to be clean, you just want to be straight to the point. That's the way you do it. That's how you look at it. We have been going on for an hour, Pocky. Did you want to cover anything else, bro?
No, I got a balance.
Beautiful. I appreciate you hopping on again, bro. Thank you.
No, man, thanks for having me. I appreciate you. Everybody have a wonderful weekend. Manage your risk, play the TA, have some fun.